Deere jumped 6.9% on August 20th, 2026, closing at $620.94. The move came right after the company reported fiscal third-quarter earnings that beat expectations and raised its full-year profit outlook, helped by an AI-driven construction boom and a $110 million tariff refund. Before that report, Deere had been on a wild ride. Back in February, the stock surged to $662 after its fiscal first-quarter results and a raised outlook. But by late May, it had fallen more than 20% from that peak, touching $529.12. It then clawed back some of those losses, but the big question heading into this report was whether the AI-driven construction demand that had helped earlier in the year was still holding up. The answer was yes. Deere earned $5.10 per share, beating what analysts had forecast. It also lifted its net income guidance for the full 2026 fiscal year. And for the first time in 3 years, quarterly profit actually grew compared to a year earlier. Two things stood out as key contributors: an AI-driven construction boom that's been fueling demand for Deere's construction and forestry equipment, and a $110 million refund from tariffs. The market liked what it saw, sending the stock up 6.9% in that single session to $620.94. First, the earnings beat. When a company reports higher earnings than the market expected, the stock price adjusts upward because the previous price was based on lower profit expectations. It's a signal that the business is performing better than the consensus believed. Second, raising full-year guidance, that's the company's own forecast of what it expects to make, tells investors that management sees the good quarter not as a one-off but as part of a stronger trend that will continue. When guidance goes up, the market can price in higher future earnings, and that pushes the stock higher. Third, the first quarterly profit increase in 3 years is a big deal because Deere has been in a cyclical downturn. A profit increase suggests the cycle may finally be turning, which changes the long-term earnings outlook from still declining to starting to recover. That's a shift that can justify a higher valuation. Fourth, the AI-driven construction boom. Construction and forestry equipment sales have been strong, and if that boom is being driven by AI-related infrastructure spending, data centers, chip plants, that kind of thing, that's a demand driver that could have legs. Finally, the $110 million tariff refund. This is a one-time cash boost that directly added to net income. It's not recurring, so the market doesn't usually give full credit for it in the long-term valuation, but it still makes the quarter look better and provides some cash that can be used for other things. The next day, August 21st, Deere closed at $647.47, bringing its gain since the start of the window to 30.5%. What remains unresolved is whether the AI-driven construction demand and the tariff refunds will persist through the rest of fiscal 2026.